After Trump's decisive win on the 6th of November, and we saw Bitcoin US dollars and yields or the interest rate went higher. In fact, these markets started moving higher in September. And that is more than a month before Donald Trump became the 47th President of the United States. We will study the direction of interest rates based on the actual market sentiment reflected in the bond yield market. I'm Con Hao. My work at this channel is to study behavior science in finance, discover correlation between different markets, and uncover potential opportunities. Before we get into today's subject, please do take some time to read into the disclaimer. First of all, let's discuss the difference between Fed's decision on its Fed fund rates and the US bond yields. They are both interest rates and their direction can influence each other. The Fed fund rates are determined by the US Central Bank, the Fed, and the 2, 5, 10, 30 years yield, they are determined by investors or lenders. And the borrowers will always be concerned on all these rates, depending on how long their borrowing's tenure is. And the next FOMC meeting is on the 18th of December. Let me just draw this out here. And this is how the actual market sentiment of the interest rate or yields traded. And let's find out from these Fed watch tools, what are they telling us? And what we're seeing here, the current rate, the Fed fund rate is at the range of about 4.5 to 4.75%. And what will be on the 18th December, the next FOMC meeting, the chances of Fed to cut by another 25 basis point. And let's look at 1 month ago, based on the actual market sentiment, with all these traded bond yields, the market is suggesting to us that was 84% chance that Fed may cut about 25 basis point. And along the timeline, 1 week ago, it was 77%, and now it is 65%. And of course, from now till 18 December, we have more than a month ago. I will continue to monitor this Fed watch tools that is available, freely available, to get the market sentiment based on the actual market being traded. What are investors and traders? What are their thoughts? What are the chances that the Fed will reduce by 25 basis point? But we could see that it seems to be shrinking. And let's examine the behavior of all this. Maybe I should just shrink this down. Of all these yields determined by the investors or the lenders. And over the past videos, since about 2 years ago, I presented this case study that we could see that this 30 years yield by the investor or lenders, that we can see that interest rate has been dropping over the last few decades. But in the year 2022, I've drawn this downtrend line. It has first time in history broken above this downtrend line. And since then, my objective or my view for the interest rate or yield is that interest rate may stay higher for longer. And it seems to me the downtrend is over. And if we're going to study throughout the 2 years, 5 years, 10 years, we're going to see the same behavior. And let me just showcase the 10 years yield. And I could see that there was this very nice classic downtrend line. And in the year 2022, it was also broken above. So now as an investor and also a trader, what I continue to monitor is that I do believe that interest rate is going to stay higher for longer. And what we saw earlier was a monthly chart, but now I'm starting into the weekly. And in the same time, the weekly chart, I'm going to draw this primary uptrend line and secondary uptrend line. And we can see that interest rate on this 10 years yield has kind of broke below this secondary uptrend line. And I reckon that the whole interest rate is maybe going to revert in and out. And my next purchase on the yield could be here, or it may continue to move up. So this is what I've drawn to keep myself in check that where are the interest rate heading, I do believe that it's going to range bound around here. For Trump's potential tariff may cause higher prices or inflation to creep back up again. But what we saw in these studies is the yield started to move higher when the Fed started the interest rate cut by 50 basis points, the first time in 2.5 years, on 18th of September, more than a month before the US presidential election on 6th of November. Do you know its reasons? I would like to hear your thoughts on this. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.